to thank the Capital Link organisers for inviting me to moderate this panel. It's probably the most expensive panel of today, if I'm looking around. So yes, this is the pre-lunch panel, and we're going to talk about ship finance. Now, ship finance has always been the engine behind maritime trade, but today I think we can say maybe the engine is being rebuilt whilst it is still running. So today's question is simple but central. How do we finance a greener yet commercially sustainable industry? I'm very fortunate to have a first-rate and diverse panel representing ship owner and ship finance interests from Cyprus and abroad. So let's move quickly on to the first question to the panel. So, from your perspective, how would you describe the current landscape of ship finance? What forces, economic, environmental, or regulatory, are driving the biggest changes? Yeah, please.
Yeah, okay. Thank you very much, George. Thank you very much, Nikolaos, Olga, and the team for the excellent planning of this conference. Just allow me, please, George, a couple of seconds to mention, to tell about Alpha Bank Group. We are one of the largest banking corporations in Greece, with presence in ship financing since 1997. Throughout these 30 years, we had a very high-quality portfolio. We experienced very minimal losses even during bad periods in shipping markets. Nowadays, we have a 4 billion portfolio of high-quality clients. We have also a wholly owned subsidiary, Alpha Bank Cyprus, which is based here in Cyprus. It recently acquired Astrobank and gained access to a shipping portfolio, which we intend to expand prudently and with high-quality customers. We generally very much like Cyprus. We believe in the economy, and we intend to increase our footprint on the island. Now, turning to your question, George, 2025 was a very interesting market year in general. Across all sectors, excluding LNG, we experienced very good rates, increase in asset prices. The main reason behind this was mainly geopolitical developments and tensions. As we all know, in most cases, when there are tensions, shipping benefits very much. We had the Red Sea rerouting that assisted very much in the supply-demand fundamentals. And looking ahead to 2026, we believe that from an economic perspective, geopolitics will still be in central focus. Probably if tensions continue to be in existence, we will experience very good markets. Generally, we need to be mindful of the the powerful force of mean reversion. We are for a very long time above the historical means, so there might be a change in the market. I don't know if it will be this year or the next ones, but we must be mindful of this. In general, it was a very good year in terms of financing. We increased our portfolio. We faced many prepayments from sale of the vessels, but overall the balance was very positive. Another force behind geopolitics was, of course, some challenges with compliance issues deriving from geopolitics, but we were glad to see many of our clients being able to be at the forefront of this, being very proactive. We also have experience and tools to mitigate this risk. And an additional regulatory risk is generally the Basel IV, which places some restrictions on the way that the risk-weighted assets are calculated. So shipping finance it has started from 2025. We have some restrictions on this. Cost has increased. This is in effect for smaller ship owners. They face a much greater increase in the interest rates. And generally, the Basel IV framework has imposed banks to try to find clients with holdco structures. It's much more beneficial for the banks to finance such type of shipping groups. So there are challenges, there are potential, and we believe that overall geopolitics from the economic perspective and from the regulator side, Basel IV and compliance will be in the center focus for 2026. Thank you.
Thank you, Nico. So I think the takeaway from your comments are geopolitics seems to be a key factor. It's a positive picture at the moment and hopefully going forward. And Basel IV is problematic, especially for small ship owners. Any other comments from any other panelists?
Can I say?
Sure. Please, Jan.
Well, first of all, thank you for inviting me to the panel. I am personally very excited these days because I just moved to Cyprus to sit together with my fantastic team of colleagues here. So we are really planning now to rock and shake Cyprus a little bit, hopefully to become a major player in the local cluster and also expand with clients here in Cyprus. Your question, I think it's a combination of all these forces, but first of all, the economic forces. There has been a lot of years now, several years, with very strong markets where owners have made a lot of money, and they have, many of them, prepaid loans and deleveraged, and at the same time, there seems to be a lot of liquidity between banks and leasing houses. So that means that everybody has used the tool of low pricing and high leverage in order to get the deals done just to stay status quo on their portfolio. But behind this, the reason why we have seen this are the result of geopolitical, environmental and regulatory issues. For a long time, there were very few new building orders placed because there was, let's say, nobody knew what kind of fuel there would be for the future. And this has kept, let's say, the fleet growth low. And at the same time, you have geopolitical factors which has led to longer sailing distances to go through or south of Africa due to the Houthis and also the Ukraine war, of course. Mm-hmm. So I think that when things are settling down, maybe the geopolitical landscape will become more normal and ships start to really trade through the Suez. I think the markets will come down a little bit and may change also the landscape for banks and leasing houses.
Thank you, Jan. And yes, again, geopolitical factors playing a big role in how the future of shipping is shaping up. We have maybe time for another quick comment. Aris, I think you wanted to say something.
Hello. Okay. Thank you very much for being here. Thank you, Mr. Bonosi, for arranging this and bring us all together. It's excellent to have this once a year. Thank you very much. I want to add, despite of that, which is quality and compliance is a part of our, let's say, shipping finance frame now. But I want to mention that there are two things that still remain the same, irrelevant of all these changes. For our bank, I mean, the quality and the character of the counterparty still remains very important, okay, in respect of all these challenges. And relationship is our main driving force for doing, let's say, business. So there are all these changes, but still, for shipping, I think relationship and the quality of our counterparty is very important for us.
Thank you, Aris. Yes, I think we all agree that relationships are key. So, my next question. We've seen an explosion of new financing sources, from leasing houses to funds to credit platforms. Would you say this diversification has been born of necessity, or is it genuine innovation? Philipp, you want to take this one?
Yeah, thank you. And welcome, Jan, here in Cyprus. We are here for 50 years now. It's It's rewarding, and you always feel to be a guest and not a foreigner. So thank you.
You have an office here as well?
No, we haven't. So I'm jealous now.
We have had an office here since 2012.
Oh, very good, very good. No, but seriously, I think the landscape is from a supply side is as perfect as you could imagine at the moment. You have all kind of options as a CFO. You can do leasing, you can and even choose between China and Japan. You know that we facilitate Japan into the European market at the moment, and it's coming with great appetite, great success. You can do traditional banking with banks that lend you on the corporate basis, rather the bigger banks. You can lend, or you can find lenders like ourselves with more traditional asset-based finance. You can tap the bond market, which is very active. So, and all these different type of financing have learned a lot in the last crisis. And I would see the private debt, private equity type of financings being kind of at the source of that. So when the times were different up until 2020, we had to learn a lot about how to finance in a different manner. And so we learned about flexibility. Yeah, we learned about in structuring deals. I think we learned about that to look at the whole capital structure is something, even as a lending bank, you should do. Yeah? You should understand your client from his equity position and what is the driving force there. What is the rationale of an investment in order to structure the deal in a right way. And also we learned about pricing creativity. Private debts, private equities were quite creative. I think we have learned a bit on that side. And last but not least, speed of decision making is especially in these days, an important factor, as you are competing for deals in the market. And if you have a lending option that is fast and that can provide you with let's say, an offering and the security of decision making, then I think you have seen a lot of which is kind of normal today, but I think compared to 10 years ago is something that is still innovative, and at least Berenberg has learned its lesson from that, and we are very happy to offer, let's say, in a very flexible way here.
Thank you, Philipp. So I think it's true to say that we're never too old or too experienced to learn. We are working in times where there's plenty of options. Now, Nikolaos, I think you've been left out. Yes, please.
Something. At the expense of being repetitive, I would like to thank Nikolaos and Olga Bornozis. I think this is an important conference, and I see so many people sitting here. I would like to see this going on for many years to come. Thank you very much. A flood of new financing, true necessity or innovation, I think was your question. I think there was a little bit of both. There was some innovation. A friend economist describes this as a balloon. When you press the one side, the other part of the balloon expands. And that's what happened after the great financial crisis, 2008, 2009, and other sources of financing came in when traditional banks retracted or exited shipping altogether. And I think the balloon has been overstretched now. And it is what I think so many people call the borrower's market. So that there is an abundance of capital, and there is I think the terms of financing are getting a little bit relaxed so that the financiers reach capital now. So it's the other way around. But I think it is a welcome addition to the market, what has come from the Far East, whether lease financing or fintech, which plays a smaller role. Bank financing is still something like 60% of ship financing worldwide, and I think it will remain for the reason that Aris mentioned before me. It's a people's business. It's a business based on relationships, and that will continue.
Thank you, Nikolaos. I always get a bit nervous when we talk about balloons, because balloons are either going to burst or deflate. So maybe the secret is just to add more balloons.
They should be repaid.
Good point. Okay, so I think we've reached the time when we have to talk about sustainability and how that combines with ship finance. It's certainly the case that decarbonisation is no longer a sideshow. So in this respect, my question is, how are the financial institutions and the ship owners responding to the sustainability agenda? Who would like to take this one first? Jan, please.
Well, I think that both financial institutions and the ship owners are responding well to these sustainability agendas. Most banks and some private credit funds, they subscribe to the Poseidon principles, and owners have invested resources into ways of improving fuel efficiency on existing tonnage, as well as ordering new vessels which are much cleaner for the future. And I think that it's important to look at this as an opportunity rather than a cost. We have had examples of that ourselves, so I think that the cost of not complying is going to be much bigger than trying to comply with this. And not only on that ship, but I think if you have ships which are very green, you attract better and longer contracts with end users, and through that you become more profitable.
Okay,
I would say we follow the market here, and so what the owners do and offer us for financing is what we then look at. But clearly saying that today climate assessment or sustainability assessments are integral part of any credit assessment. At the same time, we try to be practical, and we are not part of the Poseidon principles for good reasons, and have created our own scoring looking at the portfolio. So the portfolio should be over time become better in a way, but this does not avoid us to lend for a 15-year-old bulker. Why not? If there's a decent management, a good owner, why shouldn't we do this? It can be even more sustainable than financing new buildings all over. So I think there is a practical approach, but at the same time, and this is something that I like to mention here, maybe we don't see really what is under the surface, because most fleets today are delevered. So the second-hand tonnage is mostly delevered, what we see. The market is in such a good shape, and I'm just imagining to an exercise where everybody comes to the idea to relever its existing fleet in order to finance the new building book. And I think only then we will have the test whether the banks will be willing and able, under the current regulation, which is implemented, to finance these second-hand vessels again at a big scale. We do this with the let's say participants or the lenders here that we are, but just imagine there's a big flow of 15-year-old vessels to be financed. Who should take this? I'm at least make a question mark here.
Thank you, Jan and Philipp. So let's move on to the next question, which may be more targeted at Jan, but the other panelists, by all means, should feel free to comment. So, Jan, do you think there's real financial value in pursuing sustainability-linked loans, or is it still more of a matter of reputational advantage?
Thank you. I think it's, with a few exceptions, it's more a reputational thing, and banks brag about going in front on this. But I have still not found a bank who's willing to either increase the risk or reduce the margin just because it's green. Sorry to say. But as I said before, I think owners can take advantage of getting better employment contracts by being green, and thereby, over time, make more profits.
Thanks, Jan. I mean, yes.
Yeah.
Let's hear the response from the bank, because Jan's basically saying no advantage, financial advantage in having green ships. Is there an opposing view from the banks here?
I'd like to say that it is a little bit more than just a financial benefit. Banks need to show they're good citizens and responsible in the society, and that is important. The strategy is embedded into the bank's plans, and we do have our own plans of decarbonization. Bank of Cyprus follows the net zero strategy to 2050 in line with the Paris Accord. But it is more than that. I think the society, the people, the employees of the banks like this, and all the stakeholders, including the investors, want to see. And we see it in, for example, in the United States, there is funds that follow sustainability projects, and that is really important for the society, so it is important for the banks and for the Cyprus banks, of course.
Okay. Please, Nikos, please.
Okay.
I agree totally with Nikolaos. Just to add some color on this, banks should be mindful of greenwashing. I mean, we need to set ambitious targets on sustainability-linked loans. This is something very important, not just baseline targets and, zero fatalities, zero accidents, etc. We need to set ambitious targets in order to construct a proper sustainability-linked loan. So I feel this is an important issue in this, and that was what I wanted to add in this.
Okay, but I think...
George, can I add something?
Yes, please.
Yeah,
yes.
yeah. So I just want to say that, okay, it's not only theory. I mean, we have sustainability-linked loans, and we also implement this, so the borrower can get the real benefit on the spread. So spread is one thing that the borrower can see the benefit if they invest in if they have sustainability-linked loans. And also the lender appetite. If you have, let's say, a green vessel and 15-year-old vessel, the appetite is more towards, let's say, the green vessel. On top of that, I would say that studies show that even for public companies, investors are expecting higher returns when a company does not have a sustainability footprint. So, I mean, the market is always right. So if investors are expecting more return, so this is more cost to the owners if they don't have this sustainability footprint. So yeah, I think it's not just a theory. If there is a benefit for the borrowers.
Okay, so I think what we're saying is maybe the benefits are there, but they may not be direct benefits, but there is nevertheless financial benefits that are there for ship owners.
Correct. Yeah.
Yeah. Okay.
Much less pressure today. As you know, we fundraise as well with investors, as we don't use our own balance sheet too much. So we fundraise with institutional capital out of the German-speaking region mostly. And if I run around and compare my presentation 2 years or 5 years back to today, the sustainability slide only shows up maybe page 25, where it was on page 5 3 years back. So it's also a mirror of what happens in the EU now, from the Green Deal to the what we call industrial deal, and we have seen the debates this morning on competitiveness compared to climate neutrality, whatever that means. But I think that is a major shift that we see. So the importance relatively is lower than, let's say, at least 3-4 years back.
Jan?
Yeah, I agree. I mean, the investors, they want a high return.
Yeah.
That's what counts. And with, let's say, with the same risks as before. But I don't think they sacrifice the returns because of green, but it needs to be green in order to get the money.
So there was a mention of, Philipp mentioned the panel discussion of earlier today, and talking of the net zero panel, my next question relates to fuel, and technological uncertainty is often cited as a major challenge. So the question for the finances is, how do they underwrite ships when no one knows which fuel, LNG, methanol, will dominate? So who would like to take this one? Who's the gambler in the panel?
Do you want me to do it?
Yeah, Nikolaos. It's all right. I think Aris was first.
Yeah.
I'll give it to you, Aris.
You give it to me. Okay, thank you very much. Okay, thank you very much. Okay, our job is not to bet on one fuel. Okay, so I'm not going to take the bet and bet on one fuel. Our job is to be next to our client and support on their decision. We are focusing on the technical and operational efficiency of the client. So what we do, we're flexible and we provide support to them in order to follow the regulatory compliance and being competitive. So it's not that we're betting on one fuel. We're just next to our clients, which they know better. They know the research, they know the market. So we're just there to support them. This is my view.
Ultimately, the market will decide who is the winner in terms of the fuel race. Do you think that's fair? Is that fair to say? Nico.
Totally agree with Aris. Just to add on this, it's not only about the fuel, right? I mean, there are so many ways to upgrade your vessel, to do retrofits. I believe we, the banks, need to assist ship owners, prudent ship owners, who wish to move forward with the green agenda and the sustainability. So there are other ways apart from the dual fuel issues that can be of important benefit to ship owners and to the green agenda.
Thank you, Nico. Well, we've seen that clearly there is a challenge here that needs to be met. So let's now discuss the types of capital that are stepping in to meet this challenge. The evolution of the capital structure and the alternative finance, which we've touched on earlier, but let's look at it in a bit more detail. Because with traditional banks tightening exposure, the financing landscape looks very different to how it did 10 years ago. I think Philipp mentioned that himself earlier on. The question is, so the rise of Chinese leasing and private debt has been transformative. What impact have these players had in deal structures, flexibility, and pricing? Maybe, Nikolaos, do you want to take this one first?
Yeah, why not? Well, Chinese leasing plays an important role, I think, in the overall picture, and I would like to say that it complements what we do, but nowadays we compete against Chinese leasing. In a recent conference, I heard that Chinese leasing is about $100 billion, when worldwide ship financing is something like $650 million. So it's an important, say, 15% of the market. So it plays an important role, but particularly on new ships. I think the market, though, is big enough for everyone, and I think I have worked for banks for 32 years and bigger banks, and I'm now in a small, more localized bank, and I see the real benefit of having a close relationship with my clients, sitting close, meeting people often, and having the dialogue face to face often. I think that adds value, and I think that is here to stay and will expand further.
Okay, thank you. Does anybody want to add anything?
Maybe just a little bit here. I mean, Chinese leasing has been very aggressive in the past. Maybe less now after Trump started to rattle, where we actually have seen a lot of owners refinance the Chinese leasing structures. But we have seen more to the Japanese lately. But what we see is that some of these institutional lenders, they are very light on shipping knowledge. slow in decision making, and tend to be very bureaucratic. And their advantage has always been pricing and leverage. But we see that companies like ourselves, Sol Shipping, and other private credit or leasing funds, we have built a shipping platform where we can now compete with them. And as you say, relationships is very important because we have the knowledge and the advantage of being able to move quickly and to adapt together with our counterparties in changing shipping markets. We are aligned with our counterparties and understand the challenges that from a ship owner's point of view. And we have seen that in the past, for instance, when COVID started. We offered a 50% reduction in the bareboat rates for 6 months to one client because they were keen to keep the cash balances intact, which was not a problem. Fine, we said, and then you pay us back with interest when you start to recover the money again. And I think that is the close relationship which enables counterparties to have a lower risk in their company because they deal with people who understand shipping and are close to them, and not just a distant spreadsheet guy on the other side of the globe.
Thanks, Jan. Yes, as you say, I think it's important to be flexible and be in a position to adapt to change because circumstances will always change. I know we're pushed for time, so I'm going to come to my final 2 questions, and it's the time to get our crystal balls out and look ahead. So, my first question is, in your view, by 2030, what will define successful ship finance? Is it access to capital, strong ESG credentials, or adaptability to change? Who would like to take this one first? Philipp? Oh, sorry, Nikolaos?
Sorry. I will go from the ones that you said there, George. I will say adaptability is really strong. The laws of nature dictate that it's not the biggest or the strongest that survives, is the one that adapts best to changing circumstances. And I think that is what happens also in the corporate and the commercial world. Innovation, which is important, and technology need to be embraced in this adaptability, and that's important to make things faster, cheaper, more efficient, and banks have embraced that, and they're under a race to promote technology. Being, as we discussed before, environmentally responsible citizens is also important. And the key thing, again, is stay close to the people you serve. We're a service business, and stay close to your relationships, and that is the secret. The innovation from the one looking forward, but also some good old traditional banking on the other side. Thank you.
Thank you, Nikolaos. So we've got 6 minutes left, so I think we can probably have one, if anybody is disposed to have one more comment on that question. Nico?
Just echoing Vangelis, excuse me, Nikolaos, it is the adaptability, the major factor, the major characteristic that ship owners must have in order to move forward up to 2030. I believe also that ESG issues are also very important, and it will still have ground for bank financing in the future. So these are also very important issues. And I believe overall that indeed the adaptability is the most important factor. Yeah.
Yes. Thanks. So we've got, one sentence. Go for it.
I think that the owners will adapt. So the key has always been and will be access to smart and competitive capital. That will be the key.
Okay, so I know we're very pushed for time. So this is a very quick-fire question. It's multiple choice. It's one answer. You have to each give your one answer. Okay. So if you could change one thing in ship finance today to unlock faster progress, would it be a regulation, an incentive, or a mindset? So I'll start with Aris, and then we'll go down the line.
I will go with mindset, and I think we have to change the wait and see perspective to prepare and invest, or prepare and do something. This is my view.
Okay. Nicola?
I'd go with regulation, and I know regulation is blamed for a lot of things, but just to expand, I would like a more level playing field on regulation, which isn't the case, and I think that would help promote shipping and shipping finance.
Good point. Philipp?
I think every banker should fundraise himself. I must say, now nearly 11 years at Berenberg, fundraising for lending then was a very healthy and educating exercise for me, because it shows what really other people think about what you do, and you have to convince them of doing what you do. And this is a very helpful exercise to stay disciplined in a market. And I guess in the next 5 years we will see some interesting markets going forward, and maybe some corrections as well. And I think then we need this discipline again.
So is that mindset then? Is the answer mindset?
The answer is to an extent mindset, yes, because I think that you can only change by the mindset of senior management and banks, and I think that should be the case.
Thank you. Jan?
I think my answer goes towards regulation, and the key is to remove tax incentives and hidden subsidies from ship finance. It creates unfair competition.
Okay.
And
Finally,
I will
Nico?
take what is left, incentive. I mean, yeah. I mean, an incentive would be something that would assist ship owners. They risk their own equity. This is something very important. So either governments, regulations, even banks could provide incentives. I believe this is something very important as well.
So we have no clear winner. Mindset and regulation came level, and incentive was in third place. So I would like to thank our panel for their candor and for all their insights. Oh, we got a question. Oh, sorry.
Thank you. George has been very kind to all of you. So one question, with all this liquidity you have, which one of you will be the first to break the 100 basis points on the next loan?
I can answer this question by saying that's not us, but a friend of mine asked me recently, are we back in 2006? And I remember at the time being at Deutsche Schiffsbank, we then at the time had margins 0.6. So I fear we are close to that, but it's not Berenberg. So my colleagues can comment on their own, but so we will not be there for sure. But you might take profit of that again.
I can say we have money, but not stupid money.
Has anybody got anything to add?
I will echo what Philipp said and think we're not there yet, unfortunately. Probably say, you never say never, you things evolve, and but I doubt this will come very soon.
You've done it before. So.
I have done it with another hat at the Royal Bank of Scotland, 50 basis points loans, but I don't think this... And some of them were right to be done at the time with the regulation and the capital that was allocated at the time. But the Basel IV and the regulations now put some pressure on the capital that needs to be retained. So to achieve under 100 basis points means you'll be losing money, and there will need to be a very good reason to do that, possibly for relationship reasons.
Well, thank you for the best question on the panel so far today. But I think... Nico, you can say something, it's fine.
It has happened several years ago. It may happen again, I don't know. But I believe that good projects are ready to be financed by banks. We place special focus on the ESG issues. So the time might come that we may be able to offer below 1% for the right project. Thank you.
So,
I don't know.
I don't know.
It has happened in the past. I don't know.
On that low high note, perhaps it's time now to head towards lunch. So thanks again, and please enjoy the rest of the conference today. Thank you.